Dennis, what are some of those cornerstones of the due diligence process when thinking about a CLO investment?
Yeah, well, if you look at CLOs, they're relatively simple, but they do require specialist knowledge. The reason is because there are multiple moving parts that goes into specific underwriting, right? When it comes to due diligence, there are really three key points that investors need to fully understand, right? If you look at the heart of the CLO, what really lies underneath it, it's the pool of loans, right? There are secured loans, the loans from large corporate borrowers. There's sub-investment grade rated. So a great deal of expertise is required to fully understand what the quality of those loans, because volatility and the fundamental risks that is associated with those loans will inevitably have impact on CLOs investments themselves, right? If you're a senior bondholder on CLOs, you probably won't see fundamental losses. There were 0 defaults in CLOs historically. But what you will see is increased degree of volatility if the collateral quality, the loans that underlie CLOs, is performing not as expected and maybe have some high volatility within itself.
And on that piece about collateral quality and some of the risks investors might face, is that sort of almost in reference or relevant for what we've seen with First Brands recently?
It's interesting that you point this out because we had numerous discussions on this, and obviously First Brands is a very high profile default of the borrower that is financing themselves through loans, the types of loans that CLOs very much invest in. It's important to put this in the context, right? Yes, of course, full underwriting of the credit is important, and I'll come to it in a minute, how CLO managers played the important part. But what is important to recognize as well, that CLOs are not taking exposure to any individual idiosyncratic risk. You typically have a portfolio of 100 loans or 200 loans in the portfolio. That diversification provides a great degree of safety. While First Brands is a very high profile default, there are 6 billion of loans in issuance. The market price declined substantially, and probably some of that investment will be lost. If you put this in the context of how much exposure CLOs had, it's actually very small. On average, across European universe, exposure to First Brand was about 0.2%. And that is a primary reason why you're getting the safety of investments in CLOs, because you have diversity of the pool. Now, the important part comes, you can have an idiosyncratic story, but you may also have something developing more systemically. And that's why it's important to have an experienced manager at the helm of each CLO. CLO managers are typically managers with deep expertise in leveraged loans, secured loans. And it's important because their investment philosophy defines what the quality and the risk parameters of each CLO pool will be. If you have a manager with a well-defined investment philosophy, well-established team, a proven ability to manage the risk, these are sub-investment grade borrowers, there is a possibility that they can experience a degree of volatility. And having those managers navigating those risks through the business cycle is important. And that's what plays an important part in underwriting and due diligence of CLOs. And obviously, final part, look, I use the word safety quite a lot today, and it's important to listeners to fully understand that CLOs are offering multiple degrees of safety. One of them is safety of subordination. What do I mean by that? CLOs at the heart, once again, it's a funding tool. It provides funding to a pool of loans issued by large institutions. But you can structure the deal in such a way that you have priority of repayments that the bond investors will see. And if you're looking at senior CLOs, they're benefiting from subordination of the junior bondholders, meaning that if you got repayment on loans, you are the first in line to receive your money back on your bond. And if you happen to have idiosyncratic story and defaults materialize in the portfolio, senior bondholders are the last in line to feel the specific impact of this, right? All of those three features combined together that forms the foundation of due diligence of CLOs.